so much for joining our podcast. This podcast is called the 2040 Banker. And the primary goal of the podcast is to discuss how banking has evolved in the last couple of decades and what do we expect by 2040, how the banking would actually change. So, this is the overall theme of the podcast. Very excited to have you here on the podcast today and look forward to the discussion.
Likewise, Nitin, been a fan of the pod, so looking forward to our conversation.
Great. So I want to kick it off quickly through a common discussion that we typically do with our guests. So typically, the first question that we always ask is, why are we here? Why are we talking about banking? Is banking the most important industry in your perspective? And we see there is so much of discussion that happens around banking, surrounding the policies or whatever is happening in terms of the changes in media. Why is there so much hype? Is that hype even legit?
So, Nitin, I think I love history as much as I love the technology in the future. So, um, if we go back a little bit in history, if you think about it, there have been some, like, let's say, four or five, maybe six major industries that have existed, right? So, um, post the agricultural revolution, there was the agricultural industry and medicine. Post the industrial revolution, there was energy, oil, gas, etc., and transport that became very big industries. Now, with the informational revolution, technology, AI, you name the buzzwords here, are becoming huge industries. But throughout this, there's been banking, right? Throughout this, banking has paired with these industries from its evolution. If you think about it, if you go back in time, whether it's growth capital, whether it is working capital, without John Pierpont Morgan, there would have been no Edison, no electricity. Without the Medici family, going back really, there would have been no arts and the Renaissance, right? So I think banking has a very fundamental role beyond societal, like as a societal bedrock, beyond essentially just being an industry vertical by itself. It enables multiple other industries. But to your question, I think equally banks have great responsibilities. I mean, with all these fantastic innovations have also come the Great Depression, the global financial crises. So banks have an amazing ability to do great work, and also to, if sometimes the industry gets awry, to create very large scale destruction of value as well. So it's a very it's a very careful balance to strike, and therefore I think it's one of the essential industries of the world for in history and for the future. Too
So
long?
interestingly, you mentioned John Pierpont Morgan. So that is commonly known as JP Morgan,
That's
right?
right, of course. Sorry, to your listeners, yeah,
Yes, a long, I think not too very recently, even I didn't know the full form.
yeah,
So I always refer to it as JP Morgan.
yeah.
Yeah. So I think very, very clear with that in terms of your overall understanding. How do you see banking? Moving on from there, for our listeners, we'll just cover a bit on your career as well so that they get to know you more.
Sure.
What I understand, you have spent about 15 years at Stanchart. Post that, you moved to a fintech called as Bank Bazaar, and after that, you have spent time in Google and now with HSBC. So this is very broad, and I'm sure I think there would be much more details around your overall journey in the past in banking and technology. So anything you would want to maybe
Yeah,
show
look,
some more light around that? Yeah.
Nitin, I'll cover it. Like, so I was born in the UK, actually. My dad was a chartered accountant, had moved there from India. My mom was a programmer. But I grew up in India, went to college in the US, and then my career essentially has had like four phases. My daughters are very into Taylor Swift, so they refer to them as four eras. The first era was like, the first, I guess 6, 7 years of my career. I found myself in London working for Standard Chartered. Rana Talwar was the first Indian CEO of a multinational bank. It was an exciting time. I worked in investor relations, group strategy, supporting him and the finance director and others. Did got a lot of responsibility early in my career, and did things like crisis communications and 9/11, a Hong Kong listing, a rebrand. Then I moved into the fintech space. I went off to business school in the middle, and I came back. I went to INSEAD, and there I fell in love with two things. I fell in love with the internet and my wife. Not that order, but I'm still in love with both of those. I should clarify. But I came back, and I really wanted to get involved with the this whole internet banking thing. And so in a roundabout way, I ended up doing a bunch of work for the guy who ran internet, but also ran acquisitions, and I ran acquisitions for them in the consumer banking space. And then I took over Standard Chartered's digital assets, everything with a screen on it, from online to mobile, eventually point of sale ATMs. It was amazing. In 6 years, we launched like 26 different countries, won innumerable amount of awards, and I discovered my superpower, which we can talk a little bit about later. Is about bringing together technology in the business and finding people and empowering them to do stuff. Um, After that, I left. I said, why do this for a bank? I'll do this for myself. And then I ended up in a startup, as you mentioned, Bank Bazaar. And then later at a big startup called Google, where I spent 4 years. We built Google Pay in India, brought it to Singapore, and then worked in the US launch as well a little bit. And then, COVID hit, and I thought, I've acquired all these skills over the last 6, 7, 10 years. Why didn't I go back to banking? Because when I was at Google, I'd be constantly frustrated by the banking side of things and not moving fast enough. So I went back and I joined HSBC. It was a great opportunity. Barry O'Byrne, who ran the commercial bank, and I had a chat. And yeah, I spent 3 years there. And unfortunately, decided to separate ways. So yeah, I'm here talking to you candidly.
Yeah. So, and you have currently you are based in Singapore, right?
I am based in Singapore, yeah, when I'm
Got
not on a plane. So yeah.
it. Sure. So, Aman, I want to double click a bit on your experience in Stanchart. Since you spent, I think, large part of your career in Stanchart, about 15 years. And also, that was a time where we saw a lot of changes happening around banking, especially on the digital side.
Yeah.
So, if you can double click a bit on your experience, how did you see last couple of decades, how banking changed during that era, and maybe quote a few examples from your Stanchart journey?
Yeah. So like, if I again, I'll go back very quickly, then zoom back. So if you go back 100 years, I think modern banking has gone through two distribution revolutions, and it's about to go through its third. 100 years ago, Bank of America introduced branch banking, and essentially that was revolutionary because the bank became some place you went to. Instead of going to the one, big branch in the MG road of wherever you were in, you were now having branches in your locality. Now that was predate. I'm not that old. It predated me a lot. I joined for the second revolution at the time when I took over Standard Chartered's digital bank. That's when online and mobile. So banking was going from some place to somewhere, famously in your pocket, right? So hyper localized in that respect. And I think couple of, if you break it down, lots of things happen. But if you break it down, let's think about it strategically. Strategically, banking went from or digital went from being we used to call it an alternative channel to the primary channel, right? And it started with online, now the app economy. Operationally, volumes we saw in my time, in just 6, 7 years, we saw volume, both the stock and the flow, move from offline to online, and automation. Not just, initially it was, you know, high volume, high predictability stuff that moved on there. Functionally, you started seeing the toothbrush test, as Google calls it. Payments and statements and those kinds of things started getting hugely automated. The front end experience changed, and then at the bottom of this, from an infrastructure perspective, I think core banking, was creaking at the time, continues to creak, but there was an explosion of middleware, from data to security, and the birth of APIs and microservices that allowed for us to be able to deliver modern capabilities. So that was during my 20, the period I was at Standard Chartered. I think where it's going a little bit, and I know we'll talk more about it. If you take that same framework, I think we're moving towards a connected banking space where banking is going from some place to somewhere to something you are doing, right? So
Yeah.
classic example is Google Pay, or I am on a bus, or I am in front of a panwala. I want to make a payment. It's something I'm doing. I'm eating a pan, but I'm also paying for it in the same time, right? So
Yeah.
that kind of change is going to come, and I think strategically digital is now absolutely the primacy of digital is unquestioned. There's really a focus on data. Operationally, we are actually talking about zero ops in a realistic way. When I was doing it, when first time, zero ops was like a mission that it was like Elon Musk's mission to Mars. You say it, but you don't think you're actually going to get there unless you're Elon. And then functionally, I think there's laggards like wealth and mortgage and small business. I'm sure we'll talk more about that. Onboarding credit, those have to sort of move there. And then infrastructure has gone from you know those challenges to how do we enable cloud and partner with people. So sorry, long answer to a short question, but it is a very fundamental shift. So if I summarize it again, it's going from some place to somewhere, and now I think it's going to go to something that we're doing.
Got it, Aman. So one connected question to that. So like you mentioned that we are looking at connected banking today. Similarly, you mentioned in the last couple of decades, we saw mobile banking actually emerging.
Yeah.
The time when mobile banking was actually emerging, what was the reaction like in banks? When you were there in StanChart, did you think that it is so important? Would it actually become so important? And in terms of the connected banking, are we at a similar stage?
Yeah, it. So I'll answer that in two ways. One is not everybody obviously saw it like that. They're all a lot initially. I forget the famous quote by Mahatma Gandhi. Said they laugh at you, then they try to break you down, and then they join you. Right? There is a
Yeah,
little bit of like that thing going on. So the traditional thinkers would be like, "Oh, this is a new gimmick." Today we say that about blockchain, right? Like, well, kuch nahi hoga, something.
yeah,
And I think there were a lot of people who were that way, but I was very lucky to work at Standard Chartered with people who had really long-term vision, and I'll give you an example. We had built a rich internet platform at that stage. I remember this very clearly. It's a great question. We had built Adobe Flash was very big. We had partnered with Adobe, and we were building. There was a guy called Priyank Swaroop, who's now at Excel, and he was part of
yeah.
our team, and we were all building this. We were building this rich internet application, and at that time, we Steve Jobs launched the iPhone. Not, but what people don't forget is that not only did he launch iPhones and apps, but he also killed Flash there.
Yeah,
So I remember
correct.
this conversation. I went straight the next morning. I went to Jan Verplank, who was our global CTO and my boss at the time, and I said, Jan, did you see last night? And he was like, yeah, it was amazing. Did you see the other thing? He's like, yeah, whatever we've been building is completely useless because he's killed Flash. And so we pivoted. We pivoted that entire. We actually junked all the work. We junked all the dev work because there was no point. This is something I think we did really well. And we'll talk about what tech companies do. We pivoted. We said we're not building the mobile. We're not building the desktop app. We're going straight to mobile, and we're going native, which was an amazing call at the time because everybody's Symbian was around and everything. So yeah, we pivoted and we built for that, and that gave us a huge advantage. I think one of the things in banking is go to where go to where the customer is. Don't go to where your competition are. Because if you go to, and Jan and I used to talk it, we get frustrated because he came from Levi's and Dell, and he's like, if we're chasing our customers, we're chasing each other's tails versus actually building something that is truly unique. So yeah, short again, you're asking great questions. I'll try and answer them a little bit more
No, no,
tightly.
very, very helpful, Aman. And in fact, I can very well relate to the Flash example that you gave because at that time I used to be with a financial services firm, and I was a Adobe Flex developer, which is the programming
We were
language
building it on
behind
Flex.
Flash.
Yeah, we were
Yeah,
building. Flex was the thing, right? Adobe
yeah,
had given us a grant. It was
yeah.
amazing. We had to turn down Adobe's money, and yeah.
Yeah. So overnight, everything became useless for iPads and all, and then everybody started thinking, what do
Yeah.
we do? And then we started moving to HTML5 and all of that transition. I think that was very very interesting that time. Okay, moving on. Since we're talking about the global banks as a subject, uh, and again coming back to your experience with Stanchart, I really want to understand what has been the overall contribution of global banks to the overall banking. Across the world. But at the same time, specifically, if you can touch base on the Indian banking, how Indian banking was redefined by the global banks.
Yeah. So, yeah, I'd said at the top of this session, I love history, right? So, banking history. I'm a bit of a banking history nerd. So, if you allow me to go back 50 years as opposed to 20, I'll
Sure.
move fast, right? So, 50 years ago, I think if you look at the last 20 years, not much is the answer. If you look at 50 years, actually foundational work, from technology to talent development. In fact, Citi's CEO John Reed was famously bullish about India, long before the rest of the world was. And he and Rana Talwar, who I mentioned, Rana brought cards and retail banking essentially to not just India but Asia.
Yeah.
And of course, Rana then went on to become CEO of Standard Chartered, where I had a real privilege of interacting with him. But I guess if you think about it as an analogous, let's take credit cards like that I was talking about. In the 70s to the 90s, the credit cards, yes, I did some research on this actually. Yes, the credit card was technically launched by, I think, central bank or whoever it was, but really 70s to 90s the card business was dominated by Citi, Standard Chartered, and to some extent HSBC. They
Sure.
had the 70-80% of card volumes and receivables. They were building the technology platforms. They had the people. They were actually like, I'll come. They were hugely powerful. And then come 2000, the private banks came in, the ICICIs, the HDFCs, Accesses, and they said, your margin is my opportunity. ICICI, of course, famously, and they decimated the market share that the foreign banks had, right? They also hired a lot of the people today, if you look at even KV Kamath and others, Aditya Puri, all worked at these foreign banks, right? And then came across to these private banks and built them. And so they then the foreign banks in the 70 and then 2000 to 2010 then sort of moved into the top of the market segment. 2010 to 2020, foreign banks pretty much non-existent in the card market. Private banks are super dominant, but now it's like 20, 25 years, the same 20 years that foreign banks had it, the private banks have had 20 years. And now they're like, what do you call it, third party apps. You have Cred, you have Kotak, obviously
Yeah.
a very significant bank now, challenging the status quo. So it never gets boring. And I think so. Foreign banks have had a foundational role. I think in commercial banking and investment banking, they continue to have a very significant dominant role in terms of
Right.
network connectivity and the product skill sets and knowledge that they have, from trade finance to capital markets. Um, but if I just stretch your answer a little bit, it's not always been one way. We've also the foreign banks have also exported incredible Indian talent abroad.
Yeah.
We talk a lot about Sundar Pichai and Satya Nadella, but before him, Rana Talwar was the first CEO. There was Victor Menezes at Citigroup. There was Vikram Pandit more recently, Ajay Banga famously, Anshu Jain, and even now, more recently, like Piyush Gupta at DBS
Yeah.
and Venkat at Barclays. India has exported incredible talent around the world. Yeah, so super exciting.
And then we talked about that how global banks actually set up the stage for global banking and also had contributions to the banking in India. I also want to understand what would be the future for the global banks. Would they be able to retain their edge or no? And let me share one story with you around this concept as well. Between global versus local, typically what would
Yeah,
win, right?
yeah,
So in my MBA school, in one of the strategy class, the strategy professor asked one question to all the students. So he asked that between a global and a local player, let's say between Ola and Uber, between Flipkart and Amazon, who would win? So he asked to vote. What do you think was the choice of the students in the class. This was back in 2015.
They still picked global.
Yeah, so majority of the class actually picked global at that time.
See,
But I
Nitin,
think
this
we
is
have
why
seen,
you this is why going to business school, I went to INSEAD as and I was there in '04, and Google listed did the IPO then, and the professor asked who would buy Google shares, and
hmm,
only one person put up their hand because everybody
yeah,
thought it was overpriced in 2003 and 4. So we B school people are not very good at predicting the future. We're the I guess we're more manager mode than founder mode. If you if you think about it.
yeah, as we can see, I think overall the way Ola has fought really well with Uber in India. Similarly, Flipkart has given a tough fight and
Yeah,
has taken a lead in some of the cases as well against Amazon. So we have seen a lot of local players actually emerging much better than the global players. If we translate that to banking, what do you think would happen in banking? How would the global banks actually
yeah.
compete with the locals?
But for starters, you have to consider that global banks have lost their edge in retail for the most part. They had a regulatory and technology arbitrage, an advantage that has actually turned into a weakness because of
Hmm.
regulatory and technical developments. So there's nothing really lost to lose there. On the commercial side, I believe the pressure for retailization will be really strong. The kind of stuff that ICICI did to the foreign banks and other private banks will happen in the SMB space, is happening today in the SMB and the local enterprise space. Um, I do believe in the top end, in the corporate and multinational businesses, global capital markets. They'll still retain an edge because the private banks or the Indian banks there will have to build new competencies. They're not playing to their strategic strengths. They have to play the away game, right? The Chinese banks have done that very cleverly. They've actually followed the Chinese industry as it's gone abroad. The China plus one strategy today is actually Chinese banks just serving Chinese corporates in Indonesia and other countries, right? Um, and that they've done successfully. So we'll see how the Indian banks do on the commercial. That's a level playing field, if you'd like, on the top end of commercial. But also, don't forget, it took 25 years for global banks to lose their control to local banks. And as we said in the last few minutes, like I think the threat for I was talking to a very senior banker. I won't take his name here. He runs one of the most one of the largest banks in India, and he said to me, Aman, I'm really worried about Google and others. This was about 4 years ago. 3 years ago, and he said, I'm worried about Google and all of these new tech apps. And I talked to Aditya Puri, I talked to Piyush Gupta, and we're all worried about it. I said to them, you guys don't have to worry about this. Is my answer. You don't have to worry about these guys because these large companies want to stay unregulated. What you have to worry about is the 25-year-old version of yourself who's now can replicate what you did over 20-25 years in 10 because
Hmm.
they have the technology and the confidence, the mindset, as well as the tech to be able to build that. So I think it's very interesting what will happen in India with some of the players that are developing within India. So yeah, I'm bullish on um local innovation and on that side, but on the global markets and the trade side, I think it will take larger banks.
Got it. Aman, one thing I want to switch a bit on your stint at HSBC.
Yeah,
And HSBC being a global player, but they still have presence in a lot of local geographies all across the world. And what I want to discuss here is a bit on the technology side, how banks typically manage their digital platforms
yeah,
across the world. And what we have also seen is there are often some tension that exists between the global CIOs and the local regional
yeah,
CIOs because both of them might have their own
yeah.
different priorities. But what is the balance? How do these companies create a balance so that the growth is not actually obstructed in any way?
Yeah, Nitin, the tension is real, right? And I've lived it most of my career. Most get it wrong. Some do get it right. I believe for that period of time I was at Standard Chartered, we got it right. I think, but believe briefly we were getting it right at HSBC. If I think back of it, it's a couple of reasons. It's I think the team, the problem that we have is, and we'll talk more about this, but tech and the business don't work together. Local and global don't work together. I worked very hard to make sure that the technology and the business. I used to joke at Google. I said, in Google, the hierarchy, so the caste system was that engineers were at the top and the business was at the bottom. And in a bank, the business is on the top and the IT, we don't even call them engineers at the bottom. And I used to say, like, as a Hindu, I don't believe in the caste system anyway. So, and so I think. I think tech and the business has to work together, and then this whole local and global thing doesn't work. So I used to spend a lot of time breaking down these borders. I would employ people in India or US or wherever we were building stuff in market to do global roles, right? So we have to change that business model. The second is you have to have a clear segmentation of market, not by geography but by scale, right? So there are some markets that you build specifically for. India, I believe strongly, China, Japan are scaled markets where you build for them. Whereas we used to operate across Africa, for the most part, there Nigeria, South Africa is exception, or the Middle East, where you have to build standardized products, otherwise you're gonna be dead, right? You can't compete on localization. So being able to don't differentiate on geography. Don't divide by based on the map. Divide based on scale that you have or aspire to. The third thing I think is we were very meticulous about prioritization. I think where this goes wrong is that prioritizing, scoping, delivery. There's the devil is in the detail, and when you build credibility, I think many banking teams don't have the credibility. They break at the first hurdle, which is that they don't prioritize and scope correctly. And so there is this constant worry that nothing's going to be delivered from headquarters. So if you build that track record where you're saying, when I say that something's going to get delivered, it will get delivered. This was very pronounced when I went to HSBC. It was also the case at Standard Chartered. Delivery records change those things. And then we spend a lot of time communicating all of this stuff. People, they secure the funding at the beginning of the year. They spend like 3 to 5 months. As somebody says, funding season starts in September, you get the money cash in January, and then you spend it for 6 months, and then again you're back into funding season, right? So it's that process is flawed. We need a continuous loop rather than than these point of time cycles. So it really requires thinking out of the box, and not complaining, but being curious, learning from other industries. I think other industries do this better.
Got it. Talking about other industries, let's talk a bit about technology and some of the work that you have done at Bank Bazaar and Google.
Yeah,
Talking first about Bank Bazaar. Bank Bazaar being an aggregator, and what we have been seeing in the last 4 or 5 years, there is a transition from the bank world. Most of the banks are trying to be more digital as
yeah,
much as they can. On the other hand, we are seeing a lot of application platforms which are now trying to embed a lot of financial services
yeah,
for their consumers.
yeah.
So for a company like which is a pure play aggregator, what do you think is the future for the next decade or so? Would they have to evolve? Would they have to change their models?
So I think in the long run, the house always wins, and the house is regulated entities in financial
Mm.
services. Uh, that was also a big decision why to come back to banking. That said, I think the aggregators fueled by VC money have been great, and they've been great for moving forward, scaling infrastructure. You said Bank
Yeah.
Bazaar, but let's talk about, like, the TPAPs or third party apps, right? Like
Yeah.
Phone Pay, Google Pay, ATM. Like, with the infrastructure that the government put in place, the UPI infrastructure, and Aadhaar infrastructure, like it took those players to actually get to 300 to 50 to 400 million customers. We would not have done that through the banking system. So they played a huge role and continue to do that. I see aggregators across four domains and with two use cases. The four domains are payments, the most developed, which you see, right? It has the national rails, but it also has the players there. Then there is loans, if you'd like. That's the credit card applications and the players like Bank Bazaar, Paisa Bazaar, all of those. Then you have wealth, insurance, Policy Bazaar, I guess. And then you got emerging trade. Trade is not yet fully developed. So these are the domains, I think, of aggregators that exist. The use cases are two. Do I help with distribution and do I help with capability? My prediction, if you ask me, is that a lot of these are subscale. The subsidies that the VCs were providing, not just these entities, but I think the banks should write thank you notes to all the venture capitalists, because it brought down their acquisition costs by subventing that.
Yeah.
But I think many will die, and that's okay. Some will consolidate, and I think a few of them will get licenses and become banks.
Hmm.
And I think that's I think the accelerant, as I said, is the DPI, or the digital public infrastructure. So Aadhaar, UPI being the bedrock, but then I'm super excited about what ONDC and the sort of the ONDC Oaken kind of nexus is
Yeah.
doing. EDI, treads, those kinds of things will be accelerants to that. And yeah, there'll be aggregators that come in there. They either will serve the bank, or they will die, or become a competitor. Sorry,
Got it.
blunt answer. And I didn't comment specifically on a former employers. I know I was a bit, but I think they have played a huge role in India, but I think a lot of these will consolidate.
Yeah, but it's very relevant, Aman. See, eventually everybody has to keep evolving
Yeah,
with the way the industry is moving, and financial services, for some reason, has seen the most action in the last 1 decade. Especially last 5 years, we have seen a lot of action.
yeah,
So I think for everyone, I think even some of the payment companies that you mentioned, Google Pay and all, they are constantly iterating. So I think it applies to all, aggregator being one in question, but it applies to all.
yeah. But I mean, you look at it. One of the biggest things, revenue sources for Google Pay or Paytm, until its recent challenges, has been acquisition of personal loans for
Yeah,
banks, right?
correct. Yeah,
Is that actually what Bank Bazaar and Paisa Bazaar should be doing? Yeah. So I think that'd be like that's what I mean by, it's not just like one will die and one,
yeah,
they might
yeah,
consolidate and say, actually, what it will boil, if you're going to play the distribution game, you have to scale is the key, right? You either
yeah,
have to have the scale on the distribution, or you have to serve into a bank, right?
right. And about your other stint at Google,
Yeah.
so how did you find working with a company like Google culturally in terms of the overall methodology approach? How did you find company like Google compared to banks, Stanchart or HSBC? How were they
Yeah.
different?
So the Google I worked for was now 4 years ago. So if you talk to Googlers, it's a very different Google. But I was there for the last of the glory days. Look, and still, it's a fantastic company. I hold a lot of equity from my perspective in it. Um, I've asked this question a lot of times, and I've now, like, I could spend the whole podcast on it. So I've got a small framework for it, and it's about three C's. It's about consumers, conviction, and capital. I think the thing about not just Google but technology companies is that they are monomaniacal about the consumer. They really obsess about the consumer. They will leave revenue on the table if it means losing consumers. It's a very fundamental difference from banks. Banks are obviously always chopping the tail of their book. And the reason they chop the tail is because the tail is expensive to maintain, because they haven't
Yeah,
automated. I mean, imagine Google saying, oh, you have not used your Gmail account, we're going to shut it down, right? Like, I mean, that doesn't happen. So I think monomaniacal about where the consumer is going. There's a lovely phrase, quote from ice hockey player Wayne Gretzky. It says, skate to where the puck is. going to be, sorry, not where the puck is, right? Banks are all
Yeah.
skating to where the puck is. Technology companies skate to where the puck is going to be. And to do that, you need to have conviction. There is a higher purpose. People join these companies to change the world, not make it go around every day.
Mm.
Uh, you saw last night, Elon Musk, catching a, a rocket with a pair of chopsticks,
Yeah.
like
Yeah.
that kind of thinking requires insane conviction, right?
Yeah.
And it requires the simple question, why not, as opposed to
Yeah.
why. When you go to banks, there's too much why, I mean, even salespeople have become compliance people, and so, that engineering mindset that comes with why not, and then not only just why not, like, and then just then breaking down. What I mean by engineering mindset is breaking the problem down, and figuring out its component parts. It's those people who break down a computer and put it back together just to learn how it works, right?
Mm.
um, I feel we don't have enough of those. We used to, all the people I mentioned, all the Indian leaders that I mentioned
Yeah.
in banking, they all did that. We have a little bit of lack of that these days, in my opinion. And the last thing, capital, is about patient capital. um, I saw at Google, at HSBC, we were, you'd fund projects. You were very patient till the launch, and then you get very impatient once you go to market. You're like,
Mm.
where is the customers? Where is the P&L? Right? Are you spent 2 years or 3 years building this? Give it some time to succeed. I think banks are very unforgiving of their teams when they go live, because they want this instant like, it's like you were cooking a fancy gourmet meal. You weren't making Maggie noodles, right? You're not going to get
Mm.
the 2-minute result around this. So I think tech companies are much more patient, and conversely, they will kill the project. So, if it's not working, I have seen us, Google's famous for getting rid of products that don't work,
Yeah.
right? And by the way, don't work meaning didn't get to 100 million customers. So
Mm.
I think that ability to pivot. I talked to you at the top of this about pivoting from Flex and Flash to mobile. That's a great example. If we hadn't pivoted then and continued on, we would have wasted tens of millions of dollars, as opposed to less than $1 million, and captured the opportunity. So that's on the flip side. I think banks are more structured than technology companies.
Yeah.
And in a regulated industry, trust me, having worked in Google and others, and had to face off with regulators regularly, that is something that banks do much better than tech companies.
Maybe I think that may be one of the reason people park their money with banks and not with technology companies.
Yeah, I think so, partly. I think people are very conservative. Like, I've always said this to people: I'll take a loan from anybody as long as you're not going to come around and,
Yeah.
like, stretch
Correct.
my kneecaps.
Yeah.
So if I go to the if Bank of Nitin comes to me and says, "Hey, Aman, I'll take your mortgage on for like half the cost." Boss, thank you, Mr. Sharma. Here's my docs. I'm good. But if Bank of Nitin comes to me and says, "I know you don't know me, but I'm going to give you like 5% extra, double your interest rate," I'm like, thanks. I'll
Yeah.
just. So we're very conservative on the liability side of
Correct.
the balance sheet.
Yeah.
Personal balance sheet. Um, yeah.
Great, Aman. So I think we talked a lot around, I think, what has been happening in the last couple of decades. Before we move on with rest of the questions, I have some rapid fire questions for you. We have
Okay.
close to about 10 questions. That is okay with you, we'll do that.
Absolutely. This is Karan Johar style. I feel I need to
Karan
pout
Johar
my
for banking, yeah.
I have to pout my lips now and talk about nepotism. We have none of that in banking, of course.
Yeah, so for these questions, I think you can just keep your answer short, maybe a few words. Or if you're not comfortable, you can just pass the question as well.
Oh, okay.
Okay? All right. So, question number one: what is more complicated, explaining agile or blockchain to a room full of bankers?
I think both involve bankers with dangerous half knowledge. So I think agile is harder
Oh, is
because
it?
fewer people care to know about it.
Okay.
Everybody cares to know about blockchain, so I'd say the answer is agile. Yeah.
Got it. Okay. Next question: What is more likely, reaching a meeting on time in Mumbai monsoon or a glitch-free software demo?
I think they're very simple. I think reaching, I know that sounds crazy in this season, but reaching a meeting on time in Mumbai, I think both require planning, but planning
Yeah.
on software is faster.
Okay. All right. Question number three. What is more painful, a system crash during an RBI audit or accidentally sipping boiling hot coffee?
I'll sit in boiling hot coffee. Yeah, the after effects are milder. uh, if you allow me to, after this, I'll tell you a story about a regulatory crash that and traffic if afterwards.
Go ahead if you want to share away right
Okay,
away.
well, yeah. So essentially, God, I might get into trouble for this, but let me. So I was a very young guy in investor relations in Standard Chartered, and our board had arrived in Hong Kong. I was taking them around the branches to show them this fancy new branch system that we had built, and we were in Hong Kong, right? So I had to go in a bus, pick up the board at the board hotel, and drive to the thing. And there's a bunch of elderly board members, all very nice, really great conversation. This was a great moment for me, a young guy, taking them. You're going to show them
Yeah.
new technology, excited. And then I get a call on my fat Nokia phone, and they said, Aman, the branch system has gone down. I was like, oh my god. So the branch system has gone down, and you have to find a way to delay them. I'm like, boss, we are literally 5 minutes away from, we were in a place called Causeway Bay. We're driving through that, and we're 5 minutes away. How am I going to? And it was a very senior person. I won't take the name. He's like, I don't care. This is your job. Do it. So I was like, I had to think on my feet, and I went to the
Mhm.
driver, and I had one a person there, and I went to the driver and I told him, drive straight into the traffic. And then bus driver's whole job was get the board to there on
Yeah.
time. I was like, change of mission, drive into traffic. and,
Yeah.
and sure enough, he took, instead of going straight, he took a left turn, went straight into the traffic, and we emerged 15 minutes later, and the systems were back up, and I was a hero of the day so sometimes you have to go slow to move fast. is the lesson.
Yes, yeah, when any of those board members watch this podcast, they'll
I think they're
realize
all, I
why
think
why they
I
were
can
taken on
face
a
them.
tour.
They're all retired, and my all my stand chart options are vested, so I can tell you that story.
All right. Next question. Which is harder, keeping up with the global regulatory changes or with Indian WhatsApp family groups?
I think Indian WhatsApp family groups, they're both very prolific, but I think
Yeah.
the regulators are less random and emotional.
Got it. Next question. If you could travel back to the 1980s and give bankers one piece of modern technology, what would that
Oh, it would be my other love, the internet. Like for
be?
sure. Like and not just the 56K like clanging version, but I'd give them the T1 version that eventually came, and maybe throw in cloud computing with them so that we could be ahead of the times. Yeah. And be more inclusive of banking. Yeah.
Great answer. Actually, I thought you'll say something like mobile banking, but yeah,
Well,
internet
80s.
is
You
even
said
more
80s. So
fundamental.
internet hadn't become mainstream. Huh.
Yeah, yeah. All right, next question. Would you rather have a conversation with your bank's chatbot or Alexa?
See, I gotta be. I would add Google Assistant. I'm not an Alexa guy. More contextually aware, though. I have to say the Chat GPT audio feature is awesome
Hmm.
as well. Yeah. So sorry.
So Google team
I
would be super happy
well,
to
it's
hear
a good.
this.
Yeah, it's better.
Got it. Next question. Would you rather debug a legacy banking system or answer customer service emails for 8 hours?
Customer service emails. It gives you. Uh, what I love, by the way, about CEOs like Tim Cook or Jeff Bezos and all, they actually don't see. That's actually a really important point. That's not a bad job. Looking at customer
Hmm.
service emails is actually should be part of your job. It's not a pain.
Yeah, yeah. Got it. Next question. What is your favorite financial acronym that no one really understands?
Hmm. I think EBITDA. ZERP. I think ZERP would be good. Zero interest rate phenomena. We've talked about,
Yeah.
like the free money that had come from quantitative easing. I think ZERP created a lot of bad behavior, but ZERP's
And
not.
where do you use this term?
I mean, it's lots in the VC land, right?
Yeah.
I mean, I think a lot of VCs are wishing it was still ZERP era.
Yeah, got it. What's the longest you have gone without opening your wallet?
Uh, I don't even carry, like, as I speak to you, I don't even have my wallet, but I'd say 3 weeks to a month. In Singapore, like it's very, very
Mhm.
automated. I only need
Mhm.
my wallet for identification. But yeah, 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 absolutely. 3 weeks. That's it.
Does that include cards also? Do you
Yeah, I don't
don't even
use
use
cards. I mean,
cards?
Singapore has one of the highest terminalization. So this is
Mhm.
different from India. Like, not only can I pay a merchant using QR code and phone number, but I can also pay most merchants using tap and pay. So even my when I drive, like, the card is linked to the car unit. So when you drive in and out of a parking lot, it's all automated. So you really don't need to carry cards. Yeah, we kind of. I mean, India is amazing. It's come a long way, but Singapore's a little bit further ahead on that journey.
Okay, one bonus question.
Okay.
UPI or card payments, which one would be bigger in India by 2030?
Sorry, which one? Sorry.
UPI or card payments, which one would be bigger in India by
Yeah.
2030?
UPI by a country mile. I mean, yeah, it's not even a question. Yeah.
Got it. Last question. If you could print your face on a currency note, which country's note would that be?
Hmm. I guess I'd pick the country that the note that is the large. Study this. The note, I thought the Indian rupees would be the highest circulation, but actually it's the hundred
Mhm.
dollar bill of the US that is the most circulated. And plus, I wouldn't want to replace Gandhiji on anything, so I'd rather go for the Benjamin Franklin on $100 note. I'd quit that again. Yeah, call them
Got
Amans
it.
instead of Benjamins.
Got it. So this ends our rapid fire question round. So there is, of course, no right or wrong answer, but we'll totally let
Do I get a
the
hamper?
listeners. No, so we will totally let the listeners judge you with
Okay.
your answers.
Okay.
That's the only thing you get for free here.
All right.
Okay, so moving on, I think uh, I want to talk a bit more about the last 5 years, what has happened, especially with the fintech world. The way it started, and I still recall when the fintech world has started, a lot of banks were actually insecure about fintech. And you did mention
Yeah.
about maybe some
Yeah.
people worrying about Google Pay, which is a more recent phenomenon actually.
Mm.
So initially, a lot of banks were insecure about it, but then we saw that banks understood the value that where in the value chain fintechs are fitting, and then they started partnering with them. But
Yeah.
more recently, what we saw in the last couple of years, a lot of these relationships between banks and fintech they started getting under the radar of the regulations.
Yeah.
A lot of fintechs, etc., starting getting axed, and also the banks started getting penalized
Yeah.
for that as well. Where do you think is the overall bank fintech relationship at the moment? At which stage are we, and what do you think? How would it evolve in the next 5 to 10 years?
Yeah. To answer your question, I think it goes back to the answer I gave you a little bit, to be repetitious. Um, I think I think banks and fintechs have co-op. There's a word called co-opetition. They've been competing as well as and cooperating with each other. I think that co-opetition, that politeness of it, will dissipate into, um, as I said, I think many will die. Many fintechs will die because they'll be starved post ZERP era. Um, but I think those that remain, some will consolidate and serve banks, and then few will get licensees and become competitors. Um, and I think there is a role to play for fintechs here. I think fintechs move faster than banks, and I think they move faster than banks for a couple of reasons. I think they move faster because they're smaller and more focused. I think they are better funded. and not public. So they don't have the public markets, and they operate like tech companies, right? They have that engineering mindset I talked about. They also don't have three anchor problems that banks have, which is legacy businesses, legacy infrastructure, and legacy mindsets. But scale matters in this, and I think you're going to see the wheat separate from the chaff. Having said that, like, again, I this is not me saying, I don't want this to be misread. I actually think this is like, we are at that. If you go back to the internet, everybody said post 2000 that Amazon dot bomb. When the dot com bubble burst, I think fintech's gone through its fintech winter. I think India's had a little bit of a less cold winter, but
Yeah.
fintech gone through a winter, and from this winter, I think a lot of will die, but a lot the people who stay after this are going to be incredibly strong and will be part of the banking fraternity, whether it's capability providers or
Correct.
distribution.
Got it. And how are you seeing this differently compared to geography? So let's talk about India versus the
Yeah,
rest of the world, or let's say Singapore. How do you see the consumer needs or the regulatory stance different in the recent years, and what do you think is coming up in the next years?
I think consumer wise, there are two types of markets, right? In Asia, particularly, and Africa, it's being driven by financial inclusion, right? So
Mm.
let's take India. 400 million accounts. 350 million people on UPI. This is incredible stuff. Look at China.
Yeah.
What has happened with WeChat Pay and Alipay? Revolutionary stuff. Being able to give access. So the motivation for countries like India and China and in many parts of Africa is to give financial inclusion, give people access to that industry. Whereas actually in the US or the UK or Western Europe, and also Latin America, what you see with New Bank going to 100 million customers. In those places, it's more about standardization. It's more about pricing. It's more about uh, control and privacy.
Yeah.
Right? Privacy is not that much of a deal when you'd rather have a bank account than worry about privacy concerns. Having said that, I think I think we deal with privacy really progressively in markets like India and around the world. So I think that's been driven. That the other piece around this is that one of the things I've seen in my 25 years in banking is like the regulators never talk to each other, and so now regulators are talking to each other. They're regulatory colleges, they interact with each other. I still think there's work to be done, but you see some industry people move into regulatory roles, around the world. You've seen things like the world come together on Basel
Mm.
Capital,
Yeah.
1, 2, 3. They were like, I think there are over 100 different countries that have signed up to that. India being one of them as well. So there's a lot of collaboration there. In a couple of weeks here in Singapore, we've got 60 plus thousand people coming together. Across fintechs, big banks, big tech, and policymakers. It's the Singapore Fintech Fest is a phenomenal
Yeah.
opportunity for that. I think the thing that excites me the most in the collaboration space, Nitin, is national rails. I think now that national rails have been created in all of these countries, connecting up these national rails is incredible, and that's where Singapore, where I sit in, and India, where you're sitting in, have huge roles to play.
Mm.
Because India, because of the scale of its national rails, but in Singapore, because of the amount of interoperability. I can go and pay in Thailand, buy a coconut in Thailand or something more tasty than a coconut, with a QR code, and debit my account here. Singapore and India have opened up UPI access with Singapore banks, and
Yeah.
they're doing that. Like India's doing it with France, Singapore's doing it with Malaysia, other markets, Korea. So that's super exciting,
Yeah.
and a huge threat to some of the giants in the payments world.
See, interestingly, we recently did a report. I'll send you a link afterwards. But
Yeah,
it was a comparison report between how the regulations are seen between India and US. And we spoke to a lot of people from bank compliances between the two geographies, and very similar. And it actually, whatever you said in terms of the comparison, the report actually echoes the same point that While in these geographies, it's more around the focus is more around inclusion, financial inclusion.
Yeah.
But on those geographies, it's more around consumer protection,
I think
which actually basically.
yeah, and it's not like I by the way, I'm going to sound like a fanboy of the RBI right now, but my point around this is what I like about the regulations in India is they are prescriptive rather than descriptive. What I mean by that is they say what you shouldn't do, but also what you should do, right?
Hmm.
Most regulators, I've worked with regulators across 30 plus countries. Most regulators will tell you what you can't do, right? So then and I think that's been a real. Not only has the India stack been hugely important to India's development, but a prescriptive regulator who actually says do this, don't do that, right? And that's really important for growth, right? I mean, you could imagine in the US, you've got a phenomenal ecosystem, or UK, you've got phenomenal ecosystems, um, of startups, more so than India. Uh, but they that's different. They don't have that digital public infrastructure and then a prescriptive approach to regulation. It can also be
Understood.
painful. Yeah, but yeah,
Yeah. So I think we're coming towards the end of the podcast, and as a last question, I would have it's kind of a two-part question for you. The
yeah,
first one is I really want to understand in the next 1 decade how the banking acquisition would look like in terms of the digital
yeah,
versus the physical split, and across, let's say, deposits and loans primarily as asset classes or the
yeah.
financial product. What percentage do you think would be coming through the digital channels? Any number that you can
Yeah, so
project?
so I'll give you broad strokes because I these numbers vary. I don't have a. I let's start with let's break it up, right? So let's start with the thing that is going to payments. I think is now 65% digital, by and large. I think that goes to 99 or 100%. There will always be edge cases in 10 years time, right? That really payments goes, maxes out on digital and automation. I think when it comes to account opening, I think that account opening, loans, wealth, that those hover around, I think, around 45 to 50%. And I think what will drive this is two things. I think the biggest part of account opening, that is a problem. I think KYC and all of that is done, but most times you open an account, or almost close to be done. But the piece around this is credit. Automation of credit is huge. I was pushing for this very strongly while I was at HSBC. Is I think India is going to show the world, hopefully, on how to automate credit, because India needs working capital. Its SMBs need it more than any other market, and are not really served as well as they can be. And the SMBs of India are going to, if India is going to go where we talk about, then it needs these SMBs to take off. So I think that's the, I don't know, but I like that needs to be solved, and that's a world first that it needs to do. But I do think, um, account opening, the basic account opening goes to 80%, on that stuff. The piece which the credit piece is the one which I think I'll hedge this goes, somewhere around, because it's close to zero, or like 10-20%, if you take both sides, commercial, and I think that goes to 50%, and that'll still be world class.
Got it. And the second part of this question, which actually is a more selfish question. So,
Yeah.
we being one of the bank tech companies, so we're building an automation platform
Yeah.
primarily for connected banking, connected lending as a use case. So, if you have to give an advice to the bank tech companies, how they're building for the next 1 decade, what would that be?
um I think be focused on the problem that you're solving, and for whom you are solving that problem. Be careful about where you get your inspiration, right? I mean,
Hmm.
we tend to idolize as I said, we in the banking industry, we tend to idolize the biggest fish, who's the most
Yeah,
inefficient, as opposed to looking to analogous industries, other countries. We could look to the West, and actually I think this, I think the way banking is going to evolve in Asia is going to be faster. I think looking at China and other parts of Singapore and other parts is much more interesting. Again, not to to as we said, to borrow ideas, not to cut and paste ideas. And I don't think in India we do that. um, and then solve for people like your business, solving for, as we talked about throughout this, solve new problems, not old problems that have been semi solved. Solve new problems that need to be solved, even if they're super hard, and solve them for scale. So there's no point solving like a really hard problem that's subscale. You have to solve really hard problems for scale. So working capital is a great example of really hard problem for scale. Trade is a really hard problem for private banks, and can help them scale. So I think those are really things. And then the last thing I'd say is ride national rates. Right? Don't fight City Hall. Ride on top of what the government is building, rather than try to build your own thing. And I've worked for a company starting with Goo and ending with O, that tries to do that and gets it wrong sometimes.
Got it, Aman. Okay, so just to wrap up, if it was only one piece of advice that you wanted to give to people who are building new age banks today,
Yeah.
what would that be?
Can I give them three?
Sorry, say that
Can
again.
I give three pieces of advice?
Yeah,
One A, one
yeah,
B, one C. Okay. I
go
think
ahead.
cultivate curiosity, build that engineering mindset in your teams. Really learn how to you make sure that your young people are asking that question, why not, instead of why.
Yeah,
Um, the second is, uh, companies like yours, or if you haven't been listed, even if you have been listed, don't be held hostage by the public markets. I mean, you have to deliver shareholder return, but the opportunity in India is one of a generational difference, right? So if you're in a mature market, yeah, I get it, but you have a responsibility. You will be remembered for decades if you build for the future, as opposed to just for next quarter. And then thirdly, don't fly solo. Partnership is really, really important. There's a lovely Swahili quote which says, "If you want to go fast, go alone. If you want to go further, go together." I think it's important to go together.
sounds great, Aman. So, in fact, the reason we started this podcast was primarily this because we believe hard problems in financial services and banking, especially in the next couple of decades, won't be solved alone. So you have to collaborate, and that's the reason whenever we talk to experts, we really want to share that knowledge, and that's why we did this today. I really enjoyed talking to you and having these discussions. Hope the listeners would actually make some benefit out of the discussion that we had today. And thank you so
Likewise,
much for joining us today.
it's been amazing. Thank you.